The Financial Survival Network, helping you survive and thrive in the new economy. Go to CarrieLutz.com and sign up for 30 free micro trainings on financial survival.
Great news, we've got a sponsor. This show is now brought to you by Miles Franklin. And when it comes to protecting your wealth, there's nothing better than gold and silver. That's what I'm buying. I hope you're doing the same. Once you make the decision to buy gold and silver, there's no better place than Miles Franklin. Look, they've been in business 22 years. And the reason I'm a customer is because when you buy, they ship. Go to milesfranklin.com or call them at 800-822-8080 to get a free quote. 1490 WGCH, this is Carrie Lutz. You're listening to the Financial Survival Network. Today is March 7th, 2012. Gold and silver getting pressured again, showing pretty substantial losses. No cause for too great an alarm, but Ron Hera is with us to pick through the bones, do a post-mortem, and explain what your next step should be. Ron, welcome back to the Financial Survival Network.
How you doing, Kerry?
Doing great. How about you?
Doing well. Pretty interesting day in the markets. Big sell-off, and I think the main force that we saw at work here was really the dollar strengthening. When you see this sort of synchronous change where the stock market, the Dow tends to fall, gold and silver tend to fall, it's usually because the dollar is strengthening, and indeed the euro is down today on worries over Greece and Italian debt.
Mm-hmm. So it's not so much the dollar strengthening, but the euro is coming under pressure again, right?
Well, yeah, and I think it's important to realize also that fundamentally almost nothing has actually changed in this situation. That fundamentally the U.S. economy is very weak. There is no real reason for the dollar to be strengthening at this time. It's basically the euro weakening.
Yeah, the dollar is the mirror image of the euro. So when the euro strengthens, the dollar goes down, and when the euro weakens, the dollar goes up. So what is a woeful precious metals holder to do?
Well, I think the thing to do in a situation like this is to basically look for bargains in the mining shares. That's what I do. So as an investor in resources and mining shares, I basically look for bargain stocks. I mean, I'm a value investor fundamentally, so I look for value entry points where I can pick up quality stocks at a fair value.
And how do you define value investing, or at least the way you do it?
Well, I define value investing as in pretty much the same way Warren Buffett does. I'm looking for a company that's going to build value, that's going to actually create wealth, that's going to create real value by defining resources, by building a mine, and ultimately by becoming a successful business, by becoming a profitable mining company, for example. So those are the companies I specifically look for, production track companies that are going to be successful as a business. And so I look for an entry point into stocks like that where I think it's undervalued. So I try, for example, I look at the charts. I'm not a chart reader per se, but I'll try not to buy at the 52-week high. I'll analyze the fundamentals of the company. I'll understand what the resources are. I actually have a methodology called the net resource value where I determine what the net resource value per share of stock is and then look at that compared with the actual market cap of the company or the share capitalization. So you can actually do an analysis where you can show what the percent differential is between the net resource value and the share price. And what you're looking for, or what I'm looking for in that case, is high multiples, where, you know, if it's a low multiple like 100 or 200%, then that's probably not a completely compelling value. But when you start to see 4, 5, 6, 700% differentials, then those are very, very interesting companies.
And I have a question for you. It's been bothering me for a while. When you see test results, right, and they look good, how trustworthy are those results?
You mean assay results?
Yeah, assay results, where they've gone on their summer or their spring drilling program, and, you know, they get some promising results. How much can you trust them? How important are they?
Well, you have to understand what results you're looking at. Okay, so I think on its face, the assay results are generally reliable, and the reason, of course, is that it's actually fraud if you give false information about those results. But you have to understand what the results are. So, I mean, there could be grab samples, there could be soil samples, there could be chip samples, there could be trenching results, or you can have drill cores with assay results from those drill cores. What you're looking for in that case is you need to understand typically what the length is. So, you know, if you have, for example, you'll often see drill results where you'll see high grades, but it'll be a short distance. So there'll be, you know, about 5 grams of gold over 2 meters. Well, 2 meters is not a lot, even if you have 5 grams of gold. So if you're like me, you're looking for a large deposit where there are high grades. So ideally, what I look for is a company where I expect the resource to increase dramatically. So from a discovery point of view, I look for like large links in those drill core results. So, for example, Trelawney Mining is a company where they had an initial drill result at their Cody Lake deposit, which was, I think, over 100 meters of more than 2 grams per ton gold. Well, 100 meters of 2 grams per ton is a huge distance, a huge length. And so just on that result, we invested in the stock, and now they have 5 million ounces of gold. So you have to understand what the grades are. You also have to understand how far from the surface it is, whether they're near-surface oxides where they could do an open-pit operation. And basically, what you're trying to understand is what kind of deposit they have and how large it might be. And what I'm looking for is the potential for a discovery to become a large deposit or for a deposit to become a multiple of its current size.
Mm-hmm. Interesting. So size does matter.
Oh, absolutely, and the length counts for a lot on those drill results.
Yeah. So it's something that people need to pay attention to. You need to understand what it means, but just because it looks good on the surface, no pun intended, doesn't mean that it's that significant. You have to go beyond that, and you have to understand what it's telling you.
Well, that's right. And if you have, for example, an underground mine where there's maybe 2 grams per ton or 3 grams per ton, that might not be enough to develop an economic underground mine. Whereas if that's a near-surface drill result where you can have an open pit operation, then those are excellent grades, 2 or 3 grams per ton.
Mm-hmm. Right. So you have to understand what type of mine, what the find indicates, because let's face it, they all of the companies can be guilty of hype at one time or another, right?
Well, yeah, and I think this is a great area where the efficient market hypothesis isn't strictly true because it requires some specialized expertise. So it's not the case that the whole market has all the information about every company all the time, which would be consistent with the efficient market hypothesis, the idea that all of the information that's relevant to the price of a share is known to the market, and therefore the market price is correct. So the whole premise of value investing is that the market price isn't always correct, and so what you're looking for is where there's a spread, basically, between the value of the company and its resource and the track record of that team building successful businesses and the share price in the open market. And these are not hard to find, but there aren't very many of them.
One of the things I found fascinating was you and I walked the floor at the Vancouver Resource Investment Conference, and there were 550 companies there approximately, and all of them had a story to tell. And I guess in that respect, they're no different than anyone else looking to attract public investment dollars. But some of the stories were a little far-fetched, and others were spot on, where you said, wow, this is a good company. I'm going to investigate it further and see what they've got. So does it start with actually going to the company and kind of kicking the tires, or is there a step before that?
Well, we basically detect companies using a couple of different methods. I mean, we monitor basically press releases. We also look at deals, so any financing deals. So we look for companies that way, and then we basically have a queue of companies that we're going to examine, and then we have a one-pass filter, which is, I call it the no long shots rule, where we basically try to rule out as many companies as possible as quickly as we can, because there are, in fact, so many. We want to basically do a reality check or a sniff test, if you will, and say, okay, is this company something that's worth looking at? And once we get past that, we narrow that down now to a much smaller list of companies that are worth looking at.
Mm-hmm. So it's really got a lot to do with just narrowing down and getting rid of the separating the wheat from the chaff, and then beginning a pretty intensive examination of the company's filings, their books, and their results, I guess, as well.
Yeah, it's a huge effort, and when we get a particular company, when we actually are going to put it in our model portfolio, or where we're actually going to make an investment decision, we do a deep analysis of the company, looking at its assets, trying to understand the team, looking at the feasibility of the project, depending on what stage they're in. So there's a life cycle continuum from early stage exploration companies all the way to major producers, and so there's many stages within there, and within each category there are also milestones. So if a company is, for example, a pre-production to production situation where they're currently a pre-production company, meaning it's production track, they have a resource that's potentially that's believed to be economic, they may or may not have a feasibility study or an economic assessment. As they move towards that actual production stage, they're going to hit various milestones along the way, in specifically the economic assessment, feasibility, permitting, etc. So we actually will monitor those companies. We need to understand their business plan. I talk to the CEOs. We monitor their actual progress against their milestones. And so as a value investor, thinking about it from the point of view of building a successful business, I'm looking specifically for the ability to execute. And I want to invest in companies where I have confidence that the team has the ability to execute, and I'm going to actually monitor them to make sure they are executing according to plan.
Mm-hmm. Yeah, so it's really a lot of work. It's not just you sit down and write a column and this one looked good, this one didn't. It's really going under the hood and understanding, like you said, the company's model, their business plan, and that they've got, I guess, the right people implementing all this, right?
Yeah, and the right investors behind it, because you want to make sure they've got sufficient working capital, access to capital. You want to understand what their capital requirements are. I mean, it's a very exhaustive analysis. But I think if you don't do that, then you're almost throwing darts at a dartboard as far as picking the stocks is concerned. Or alternatively, in that case, then you're just speculating on exploration plays. I think those are some different approaches. But I think if you're an individual investor and you're not an expert on resource companies or on mining, I think it would be very risky. And I'm not a financial advisor, but I think it's very risky to try to pick individual stocks unless you really have the kind of time and effort necessary to analyze the companies.
Yeah, it makes a lot of sense. Not for the not to be tried at home, right?
Well, exactly. Like you can't really day trade, in an hour at lunchtime. Right? That's not going to work. So
right.
By the same token, you're not going to be able to successfully analyze and resource companies unless you really are focused on investing in the resource sector.
For people, if you're looking to invest in mining stocks, where can you be found, Ron?
HeraResearch.com, HERA Research.com.
All right, Ron. Well, thanks for putting everything in perspective for us. I'm sure you've reassured a lot of people about what's going on with the metals, that they haven't lost their shine. And we'll talk to you again soon and get the latest update on what you're watching and where the prices are going.
Thanks for having me on.
All right. Be good.